Yeah, look, I think everyone's talking up the future without a doubt, but I think the big difference between the market and CEOs is CEOs are a lot more conservative over the next 6 months. I think with everyone we've seen, we spoke to someone who runs one of the largest residential property divisions for a company in Australia. You know, volumes are starting to pick up, prices aren't picking up just yet, and I think you're seeing that everywhere. I think people are saying, you know, things are better, confidence is better. You know, I've really taken a lot of the cost out of my business over the last couple of years, but I really need to see some revenue growth now. I think the market's pricing that in to a certain extent. Well, they want to see some green shoots. They want to see people talking it up a bit. Whether or not it comes through, I think, you know, even for some of our stocks, I argue maybe some of them might under-deliver on what the recent results been. But I think there's definitely some inherent leverage there. It's just whether or not is it 6, 12 or 18 months. You know, I think it's just taking a little bit longer. And I think a few fund managers and just equities in general, I think they're just reaching a little bit. You know, it just seems like the market, everyone's very quiet. Fundies aren't doing much. You know, everyone's waiting for reporting season because everyone's sitting on their hands because people just don't know. And I think there's all that uncertainty, and we're getting that from a lot of the companies we invest in, saying, you know what, things are picking up, but just don't get ahead of yourself. You know, just give us time, it'll get there, but don't expect it in the next 6 months. Look, you need, you know, running a business, running my own business, you can cut costs, but you can only cut them so far, right? It's a fact. If you keep cutting costs, great one was Billabong, I know I mentioned it before, but they said when we cut costs, the first thing we cut was marketing. Biggest mistake we could make. You know, it's really about cutting, unfortunately, it's employee costs, you know, manufacturing costs, a few of those fixed costs you're really trying to dig into, but you can only cut it so far, and then you need revenue growth. If you don't get the revenue growth, you don't get earnings growth. You don't get earnings growth, you don't get the PE expansion. So you go from, you know, we're on 15 times now. If you don't get that earnings growth, you know, 10, 15, 20%, the PE is going back to 12 or 11. Yeah, that's a fair jump. That's 20, 30%. So I see if you don't get any revenue growth, maybe not, you know, FY14, if you don't see definitely any in 15, a few green shoots, and I think the market's going nowhere or down for the time being, but ultimately cash rates are so low. If you're getting a 5% dividend yield, it really gives people an excuse to hold a stock no matter what the earnings growth is.